afternoon, good evening. Let's see that everything is good here. Looks good. Okay. Yep, now we should catch all me. So nice to see you, nice to meet you guys, and welcome to our Wednesday session. And for those of you who don't know me yet or see me for the first time, so a pleasure to be here and very nice to meet you. My name is Vladimir Ribakov from Home Trader Club, and I suggest that you go and show my first video ever at the beginning of April. I did with Eightcap, and you will know better who I am, what I do, and all my experience in the trading world. In today's video, I would like to go and follow up some of the instruments we have been talking on the last couple of weeks. By the way, I'll be here with you for the whole month of April. I will be the guest analyst with Eightcap, so I'll see you next week as well. We do follow-ups and new ideas that I constantly find as I work with my charts. Okay. So in today's list, I have the follow-up on DAX, gold, CAD franc, and Euro Australian, which I believe is approaching towards some massive levels. Before we go and talk all the technical things, so what happens around the world right now is that the market is trying to gather some sort of understanding or realization what are the probabilities for the Federal Reserve to go and to hike the rates on the next federal meeting. Because what happened is on a non-farm payrolls that was reported last week, the job market keeps being strong, and one of the factors that the Federal Reserve follows is the job market. Okay? They are increasing these rates with some logic behind that. Slowing down markets puts enough pressure for them to start slowing down, which means basically the economy stabilizes itself. Because if the economy is slowing down, the companies cannot hire in the tempo they used to. That means they reach their balance. Things indeed start to be expensive and slowing down, and for them it's a good sign. With a strong market, the way it still keeps being around, the pressure on the Fed could be still there. However, on the other hand, they have what? They have the banking system. We already saw in the last several weeks, bank after bank after bank start to be under pressure. Who would believe that Swiss credit would go in a situation like they did recently? And UBS would be first to go and purchase. Okay, so it's a very interesting situation, and right now the Fed is trying to find where this balance or where this golden center, golden middle is, and that brings some sort of, we could say, maybe more quiet, more relaxed days to the market, because right now it's all about expectations and anticipation. So that's pretty much what's going on from the fundamental side. Of course, besides that, there is all the recent changes and the new deals signed between many countries, including China, India, Russia, Malaysia, and many more, in South Africa. Many more countries signing the deals to start make any financial services or any deals excluding the US dollar. That's a big thing that could be even bigger as it develops. We also saw recently Macron from France going and sharing his alarming sound also that Europe must find ways to depend less on the dollar. Okay, so it starts to move to some interesting direction, and very interesting to see how well US responds, because never underestimate a giant, and we want it, we like it, or we dislike it, or we don't want it. The US are still a giant, and they still have power. It'll be very interesting to see how this new financial direction and sort of a war would develop between all these sides. So this is from the fundamental and the technical part. Let's begin. We have several, again, interesting things, some new, like the CAD franc and the EURAUS, some follow-ups. That would be the gold and the DAX. Let's start with Forex. The first one for me would be the EURAUS, and the reason I find it so interesting is because take a look what happens with these pairs since basically 2020. Okay, what happened right after the pandemic, right? It started, it hits, it reverses instantly, and basically what happens since, the market goes and makes a bearish trend. This bearish trend was in clear sequence of lower highs, lower lows. We can see that clearly in all the trend, all the swings. And since this moment, okay, after reaching very close to the 140, it's actually between 145 to 140 round numbers, what happened is that after the slowdown and making lower lows on the chart, it turned to be that the buyers starts to reject. By making lower lows on the chart, we see higher lows on all the indicators, indicating that the sellers are losing their grip over this pair, and the buyers start to show their interest. The buyers indeed show their interest, and we get a beautiful two waves correction. Now, the reason why I love the current rally, well, first of all, it's very tradable, but second, if we take a look on the coming area, where does the pair go, what we can see that we just entered the area, I'll be drawing here, okay, of several highs in a row that's been retested. This is a massive zone of supply, because on the wave up and on the wave down, or on the trend up and the trend down, this zone was rejected by the sellers so many times. And it's very likely to assume that as soon as we enter the zone of sellers, the zone that sellers took that control, the opportunity here is that the sellers will indeed try to show their interest once again. And if we drop to the daily chart, this is where it starts to be very interesting. So here is, that's one indicator I use here, the Bollinger Bands indicator, which I am checking how and where are the conditions that the market is riding the Bollinger Bands, upper or lower of the band, without making any significant retraces. And when such a cloud or such a scenario happens, it usually puts the pressure on the opposite side to go and to make significant pullbacks. And right now we are here on this cloud without making any significant pullback yet, and on the other hand, reaching right next to the, let's go to the weekly chart again. I'll just plot the horizontal lines. And what happens here, we enter the weekly level, right, with a very serious slowdown by riding the Bollinger Band, where the grip of, the grip of the buyer starts to be under a question. From this zone, Okay, very possibly we will start to see the sellers rejecting and trying to take the control. Now, what is very important here is also the technical sign of negative divergence, which means while the market is making the higher highs, we can see the indication of slowdown building up. Look at that, higher highs versus lower highs on the moving average of the MACD, the histogram, and the RSI. The indications here are clear. All these indicators, they are great as indication. Okay? Indicator's job is to indicate. We have to follow for the price to see how the price dictates us the opportunity. So the slowdown here is clear, and it is, from my point of view, question of time until we will see the correction begin. And the very interesting thing here is, of course, the rising trend line. As soon as we start to see the sellers going and taking the control, going when pushing the price below the rising supportive line, it should be a good sign that they are back in the game, and sell the rallies becomes our plan. So this is exactly the zone I am after my sells. Keep in mind, that's weekly levels, that's a daily divergence, daily cycle. It could take time. It doesn't mean like, okay, now we have to be glued to the computer and sit and wait, like, maybe now, maybe now. No, it takes time. Very important to put a proper and correct estimation on when will a trigger happen. So give it a time, understand with what charts are you working with here, and that's the daily chart. Okay? What could happen here is also we might see early signs from the 4-hour chart. What signs? Signs of reversal. The signs I love to see begin with fake lows. So every time the market attempts to make a new high, it rejects with the opposite move down. Okay, so what could happen here is false breakouts, a sequence of false breakouts, and then lower lows. This could be a great indication that the sellers are trying to take the control, and then sell the rallies could be a beautiful opportunity to follow. So this is the first instrument for today. Feel free to share any questions here in the chat or later on if you're watching the recording in YouTube video, and I'll do my best to answer as soon as possible. Okay, and you can also, of course, reach me out directly in Home Trader Club and ask any questions there if you would like. So the next one is the cat franc, and this is where it gets interesting. It has two scenarios I follow for a trigger I want to explain. So let's start with the higher time frame, not because I'm gonna trade here this one for 10 years now, no, just to explain what is happening here. So let the chart load quickly. Okay, here we are. So what happens here is, again, from 2007, the very top it managed to create, look what happens since. It's a ongoing massive bearish trend with a clear sequence of lower highs, lower lows. However, it is right now in rounding condition. I say right now, it sounds like it's today. No, it's been like that for over a decade right now, but it's still rounding bottom. The momentum slows down, and usually it is a question of time before the big reversal takes place. Okay, we already see the signs of lower lows on the chart versus higher lows on the indicator, indicating the interest that the buyer starts to show in this pair. But now here comes the very interesting scenario. We saw the monthly chart, the levels. Here is the weekly chart. They're doing absolutely the same. 3 lower highs, lower lows, with higher lows on the MACD histogram, MACD moving averages, and RSI is very likely yet to build itself here. So that is another indication that not only for the long-term view, the buyer starts to be visual, I would say, or you can start to feel them, or at least we can start to feel the suspect the sellers have around the current levels. And from my point of view, this is only a question of time before the reversal takes place. And here are two scenarios I follow to trigger my sell. The ideal scenario would be based on a daily chart. What I want to see, oops, sorry, wrong item was chosen. What I want to see is the price going back to this sort of bearish channel, coming close to the bottom, create another low that will be here rejected by a supportive line connecting the most recent lows or the bottom of this channel. And let me go make it this way to be clearer. Okay, a low, another low. Okay, and this is the trend line, the current supported trend line. But this would be the ideal zone. That's around 0.65 and potentially slightly lower. And what I'll be looking after that is one more low to set itself on the moving averages of the MACD. RSI very likely to follow to complete a positive divergence. Once that happens on such scenario, okay, we got 3 spots on divergence, flipping from negative to positive to negative, okay, and it will create a positive divergence, multi-time frame divergence, monthly, weekly, daily. This would be an amazing place to go look for bullish signs, bullish candle patterns, the same idea of the false breakout I showed before, okay? Same like this, when slow down, right? Fake low, another fake low, and then reversal, higher highs. Okay, then buy the dips would become a beautiful plan here. So that would be also one good scenario to start to follow. And once that happens, I think it's only a question of time, of course, we should be able to see a massive rally. How massive? Hundreds of, if not thousands of points move to the upside. But this is the first scenario. The second scenario, which I want to share here, it would be the scenario on the 4-hour chart. What happens if we don't have a new low on the daily chart? Because remember, the monthly and the weekly already gave some signs, right? But in some cases, the reversal happened to be in a zigzag structure, which means 2 waves up, 2 waves down, with cleaning the low and then a fly. That's a very possible scenario, and that's what we also have to be prepared for. Okay, we already got 2 waves up, and we are very likely building the 2 waves down. So if we manage to get to this zone here, okay, that could be holding, with the weekly already building the bullish divergence, monthly already having it as well. The daily not necessarily will make a new low. Yes, it would be ideal, but not always the market is Mr. Ideal. So if that scenario happens, what I will be waiting for is the break of this falling resistance and the previous high, and then I'll be looking to buy the dips. Yes, it's more aggressive. However, the risk reward usually in such opportunities is amazing. So that allows me to give such thing a shot, and even if that turns to be wrong on the next opportunity, thanks to the risk reward. Remember, the trading is business of numbers. At the end of the day, it's probabilities, odds, and numbers. Okay, so if you lose one, but on the next time you win 3, 4 times more than the one you lost, voila, the numbers are working in your favor. And that's what trading is about: numbers, probabilities, statistics, odds, and numbers. So that's the 2 scenarios I will be following for the cat franc. And now I want to go to the other instrument, that would be the DAX, a quick follow-up on what we discussed last week, I think. I'm not sure if it was Monday or Wednesday though. You can find all this video recorded in Eightcap channel, of course. I really suggest to follow this channel. They have absolutely amazing work there, great analysts, great traders, months after months sharing with you their opportunities the way they see it. So on the DAX, what we've been after was buy the dips, and it was right here. Let me just remind quickly. So same story with the Bollinger Band, as you saw before, me presenting, right? We got the pull back to the opposite band, and here came a very interesting condition, a bullish hidden divergence. What does that mean? It's a trend continuation divergence. When the market makes higher highs, higher lows, it's an indication of an ongoing bullish trend. Okay? So a pullback followed by this scenario, higher lows on the chart versus lower lows on the indicator. Okay. This is, some call it inverted divergence. It's a hidden divergence, it's called as well. The idea here is that in such conditions, the trend is very likely to continue higher. And the trend indeed continue higher. So the question now is up to where? Going down, or up in that case, to the monthly chart, monthly and weekly chart, here is what I believe we should face. I think that the DAX is yet to complete this final top. It could be in the same top here. It could be making higher high, which would be the ideal, until this divergence on the monthly chart hits, and then a big sell coming. But it's not yet completed. And if we go to the weekly chart, here are the two zones we have in mind on the current ongoing weekly trend: higher highs, higher lows. What I do in that case, I plot Fibonacci expansion, okay, from this point to the end of the first point, the end of the correction, and that's the levels I got, 1, 2, and also, of course, again, here as the third level, okay, and on the second leg of expansion, same story, 1, 2, 3, that's the zones. So the first zone was already retested, we see that. The next zone is slightly higher, and that would be the ideal destination for that case. Does that mean it's guaranteed to reach it? The answer is no. But as long as the reversal signs did not complete, the bullish trend is on, and slowly, slowly could be reached. The final potential level is here above the 18,000. So the first zone was here around the 15,700. The next zone around 16,500. The next one is around the 1800, slightly even higher potential. Now, here's why it's interesting. That's, of course, an update for those who are riding the buys. But what about those who are not? Okay? So first of all, buy the dips could still remain relevant as long as it's ongoing. But the interesting part for me here is once we reach these zones, we reach the potential scenario of multi-time frame divergence, monthly, weekly, and the daily then. From there, break of the rising supportive line could be a massive call to start looking for sells. We are talking here about a long term, because this is, again, monthly, weekly, daily. It takes time to develop all that. And if we go to the daily chart, we can start looking for these signs by reversals. Remember what I presented before? The same logic, right? Fake highs, slowing down, the pressure of the bearish divergence already here. Okay? And we can see that even in the past with this divergence, every time the market made a high, boom, eventually it goes back with a massive move. And now it is building the very likely the final third leg. So as soon as that completes, we should be very seriously here considering the sell options. So the classical scenario again is the break of this supportive, the rising supportive line, or start to see fake highs created, then the market flipping to make the lower lows. Basically indication of what? Higher highs, higher lows, indication of upturn. Flipping it, making lower lows and then lower highs, indication of a potential reversal and beginning of a downturn. Okay, so that's definitely things to pay attention to, and that's my DAX. And the final one for today, the gold. I spoke about it on Monday, on the last Monday, with these two levels in mind. Okay, this is the main level I have in my view. I want the market to come there, and I'll start looking for the buys. Exactly like with the indices, I believe the gold is yet to form a final high here. Okay, until it will complete, again, same story, monthly, weekly, and then the daily divergence. This, I believe, should be a very tough zone for the gold. Making all-time high brings the pressure with it, of course, but I don't think at the moment that the all-time high was already completed. For me, the plan was and remains the same by the pullbacks. Now you can see the Bollinger Bands in that case. As soon as we got the red cloud, we got the massive reaction to the downside. Blue cloud, same story, reaction to the upside. And you can see it also how usually it reflects. So right now, I believe the correction is not over. I think there is a very good probability we will slow down, slow down, slow down, slow down, and as soon as we reach the supportive zone or the rising supportive line, they could also eventually meet us in the same place, then the buys should be good and deliver the all-time high. So basically, my plan wasn't remain the same here. Buy the dips. Did we have dip enough already? I don't think so. I think, and even if yes, in that conditions, because that's a question I've asked many times. Vlad, what do you do? How do you know if the correction is deep enough or not? So for me, it's all about risk reward. I know that if I am after the buys here way earlier than I wanted, my risk reward is not going to be as good as it will be from the levels I anticipated. So I prefer personally a miss over a regret, always. For myself, I take a miss over regret easily. Okay? The reason is very simple. I don't want to be involved in any trade unless the conditions work in my favor. And conditions are not only technical, conditions are mainly money management wise and risk management wise and exposure management wise. Meaning I want to make sure the numbers are in my favor. So I wanted to reach the levels I'm anticipating. Only then I start looking for the opportunities. Okay? I'm not taking like, oh, any pullback, oh, pullback happened, let's buy. No. Why? It might be early trap, right? So I always put the levels of interest I have, and only then, if the market reach the zone, reach the level, then I am ready to act. Okay? Or as I love to say, one of my mottos, react to the price act. I love to react how the price acts. And if the numbers are not in my favor after the first price act, that's it. I prefer miss over regret. Do not chase your trades. Very important thing, guys. Do not chase your trades. Let the market get your levels. Prepare the setup you are anticipating. If happened, you know how are you going to react. Okay, but don't force it. That's a mistake so many traders do. They are chasing. They are pressing the button too early. The fear of missing an opportunity in many times is bigger than the fear of losing money, and I think it's wrong. You don't need to fear to miss. You don't need to fear of losing. You just need to be smart and react from the correct levels. So with that being said, I don't think the pullback is over. And even if I'm wrong, no problem. I prefer the market goes all the way up without me, and then I'll be looking for the bearish divergences and signs, and we'll be attacking for the sell. I'm not chasing any trade just because it made a little pullback or anything like that. So that's my levels, this and the ongoing supportive line. If we get them, definitely after buys. If not, there is always tomorrow for trading, and that's why we are making these follow-ups to see how the market responds and where does it take us to. So that's it for today's update on the market. Thank you very much for being here. Thanks to all who will be watching the recording. As I said before, feel free to reach me out and ask any questions in the comments or contact me directly in Home Trader Club. I hope you find it useful, interesting. I'll be with you on Monday and basically the whole remaining part of April. I wish you a happy spring. Enjoy the beautiful weather there outside. And thanks to Eightcap for making such a wonderful event for traders. All the best. See you soon.